Disclaimer: stock trading is inherently risky and the users agree to assume complete and full responsibility for the outcomes of all trading decisions that they make, including but not limited to loss of capital. Matthew, chapter 25 verse 14-30, "For it will be like a man going on a journey, who called his servants and entrusted to them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug in the ground and hid his master's money." For today's video, we are going to talk about market exposure. Market exposure is the monetary amount or percentage of a larger portfolio invested in a certain kind of investment, market sector, or industry. Market exposure is often represented as a proportion of total portfolio assets, such as 10% exposure to the oil and gas sector or $50,000 in Tesla stock. Market exposure is the amount of money an investor might lose due to the risks associated with a certain investment or asset type. It is a method for assessing and balancing risk in an investment portfolio. Excessive exposure to a single region might suggest that a portfolio needs to be diversified. Investments may be classified according to the asset class in question. A portfolio, for example, may consist of 20% bonds and 80% equities. Thus, the investor's market exposure to equities is 80%. This investor stands to win or lose more money based on how equities perform versus how bonds perform. Recognizing market exposure. Market exposure reflects an investor's risk and reward potential as a result of asset allocation within an investment portfolio. The percentage of assets invested in any particular asset class, market segment, geographic area, industry, or stock may be used to determine the extent to which the investor is exposed to probable loss as a result of those specific assets. Market exposure may be divided depending on a number of criteria, allowing an investor to lessen the risks associated with certain investments by balancing exposure to other asset classes, geographies, or sectors. The larger one's market exposure, the higher one's overall market risk in that particular investing sector. A concentration of market exposure in any one location might result in significant losses if that sector is struck severely. An investor might analyze assets by geographic area when analyzing market exposure in a portfolio. This may include separating domestic investments from those of foreign economies, or further segmenting foreign markets by their particular geographic location or as developing markets. For example, an investor's portfolio may be split 50-50 between local and overseas equities. If further exposure separation is needed, the foreign holdings may be further separated to display 30% in Asian markets and 20% in European markets. Furthermore, the Asian component may be divided equally between established and growing markets. Diversification may boost returns and reduce losses, therefore portfolio exposure to securities, markets, and sectors should be taken into account when allocating assets. A portfolio having market exposure to both equities and bonds often has less risk than one with solely stocks. Diversification decreases market exposure risks. This relates to asset class or industry allocation. In the above example, selling 50% of healthcare assets decreases market exposure to 15%. Market exposure can be managed through diversification, which involves investing in a variety of stocks across different sectors and regions, as well as in other asset classes such as bonds or commodities. This can help to reduce the overall risk of the portfolio and limit potential losses in the event of a market downturn. It's important for investors to determine their own risk tolerance and investment objectives before making any investment decisions. It's also a good idea to regularly review and adjust their portfolio to ensure that they are maintaining an appropriate level of market exposure based on their individual needs and goals.
That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also follow us on our Facebook page to learn more about the stock market.